Let's talk about the sort of big driver for global markets, which is geopolitical tensions. This is, of course, the flare-up in the Middle East that we've seen over the weekend. Of course, you had attacks from Iran over in Israel. And then expectations were that things will kind of settle down because that's what we heard from Iran. But now, overnight, we've heard from Israel saying that they've got no option but to retaliate. That's a quote. Sonal Varma is Managing Director and Chief Economist, India and Asia ex-Japan and Nomura Financial Advisory and Securities. And we have Mr. D.P. Srivastava, former Indian ambassador to Iran and ex-director Ed Gale joining us to take some questions. Mr. Srivastava, thanks very much for joining us. Sonal, good to have you with us here as well. Mr. Srivastava, I can start by asking you, sir, is there a playbook here? Do you think lots of moving parts? US has said that they will stay out of it. Expectations were that this is it, attack and retaliation, and that's the end of it. But apparently not. What are the chances that this escalates in a meaningful way, sir?
There are in a war situation, there are no scripts. Neither side can really anticipate what the other side will do. The US has advised Israel to take the win. And it has also clarified that it will not join in any offensive action against Iran. It depends. In case Israel takes this advice and does not retaliate or does a symbolic action, the situation will subside. But in case it decides to up the ante, there will be definitely a counter strike by Iran. The first time around, Iran telegraphed its strike in advance to Arab countries and also indicated to the US. Next time around, this kind of warning may not be there, and therefore the results could be worse. So I don't think anyone, any side has the comfort of playing by known rules.
Mr. Netanyahu is deeply unpopular in his own country. Is this about domestic politics? More than anything else at this stage? Because as you said, I mean, when Iran attacked, it telegraphed that attack well in advance. They gave a 72-hour notice. So is this about domestic politics more than anything else?
Israel's official position is that they have to maintain or restore the deterrence. We have heard this language when Israel was attacked by Hamas. And of course, there Israel did have justification. Hamas's terror attack has to be condemned. But this time around, the exchange started with Israeli attack on Iranian consulate. So the deterrence argument cannot be taken too far. Iran reacted to what was started by Israel. Now, you mentioned about Netanyahu's unpopularity, and that is, of course, there, and it's going to get his situation is getting more difficult because of the unfinished war in Gaza. They have not been able to either get the hostages released or destroy the Hamas. Netanyahu knows that end of the war could also mean end of his coalition. So there's a built-in escalation in some of the decision-makings by Prime Minister Netanyahu.
Sonal Varma is also with us. Sonal, I wanted your thoughts on what the repercussions could be on different economies, right? And more importantly, for our viewer watching us right now, is there any impact at all on India if this escalates further?
Yeah, sure. I think, just to put this in context, I think for India as well as for most emerging markets today, we are actually facing sort of triple threats. One is oil prices and the future direction and uncertainty around that. Second is the higher for longer theme from US with discussions on whether Fed will cut at all this year or not. And third link to that is really the stronger dollar and the spillovers on capital flows and currency pressures. So the uncertainty and risk of high oil price actually is coming in that backdrop. I mean, what it does for most EMs, including India in particular, is essentially it increases the risk on inflation. It increases the risk of a wider current account deficit going forward. And if the uncertainty and tight financial conditions continue for a longer period of time, then there would be also some downside risk to growth over the medium term. That said, I think things are still quite fluid. I think India does have a couple of buffers in place in terms of foreign exchange reserves that we have, and at I would say until at least $110 per barrel on Brent. We don't think the pass-through domestically to consumers is going to happen. So uncertainty is quite high. Risks have increased, but still in a wait-and-watch mode for now.
And Sonal, your global team, are they calling for oil prices higher or sort of stay here lower? That is one. And the second is the rupee. But it's not just the rupee against the dollar. I mean, a lot of Asian currencies are now at multi-year or multi-month lows. So just a word on that as well.
Sure. I mean, so on oil, currently our base case is the Middle Eastern situation actually does not escalate. So we are assuming that Brent oil prices on average stay around $90 per barrel. So that's the baseline we are going with. Of course, there's uncertainty in terms of whether there is a further escalation or there could also be a de-escalation scenario. So, but $90 per barrel is what we are working with. As far as India's macro sensitivities are concerned, we know that every 10% increase in oil prices, roughly around 30 basis point on inflation, about 15 basis point on growth, and also around 30 to 40 basis point on the current account balance. That said, I think the spillover from higher oil price to current account is clearer, whereas the spillover from higher oil price to domestic inflation is not so clear because oil marketing companies are likely to absorb some of the increase initially. On your second question on the currency side, yes, I mean, there is pressure from the weakness we are seeing also in Japanese yen, and there's upside pressure in China as well on the currency, which is putting pressure on the broader Asia complex in the higher for longer backdrop from the Fed. I think, for India specifically, actually, volatility has been amongst the lowest in Asia over the last many months. We have seen some weakness in INR today. But the entire point of RBI actually building all the FX reserves was actually to manage volatility in times like this. So we do think, RBI is going to deploy the FX reserve buffer that it has to contain volatility. So we are, I would say, less concerned on currency pressures for India in this global backdrop.
All right, we will leave it at that. Sonal and Mr. Srivastava, thanks a lot for joining in and giving us, a quick snapshot of how to react to all of this global turbulence as well as the impact that it would have. Let's get back.